The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials right now up 37. You get the Nasdaq up 9. S&Ps are up 7.5. Gold contracts up $2, trading 13.15. You get silver up 12 cents, $16.51. They both have caught a bid this morning. Came back after being negative. Oil to the moon, baby. Up $1.80, 70.86. We're going to get the numbers out here today.
You want some volatility. How about that oil yesterday?
Oh, man. $2.50 move.
In like 10 minutes, too.
Yeah. You gotta love
pretty
it.
remarkable.
Notes and bonds. 10-year note down 7 ticks, 119.09. That broke into the lower range again. The 119.14 is the number to watch out here, folks. We just hit 3% in the 10-year again. 30-year bond down 20, 142.24. King dollar down 153 ticks, 92.810. Now, it's going to be interesting is King dollar came right next to that December 2017 high. We'll see whether that's it for it. It's been quite a run.
Of course, we had the bond auction at 1 o'clock, right?
Yeah.
$25 billion in bonds.
Right.
We'll see how that shapes
And
rates.
that's going to be a big one.
Right?
It's going to be, like, what is the demand versus the supply? Is it going to be 2 to 1, 3 to 1, 3.2 to 1, dollars chasing every dollar of...
Dollars chasing dollars.
Dollars chasing dollars, baby. Euro's at 118.77. The yen is at 109.75. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand options, you want to understand defined risk, you want to understand futures, all of the above. If you haven't taken a look at the TD Ameritrade platform, it's an outstanding platform. It's a retail platform. It's really a professional platform. Bottom line, whether you're, whether you're a professional or a retailer, bottom line, amazing platform. Just come over to our website at TFNN. You'll see the banner. Hit the banner. Bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team as he puts on these hypothetical trades each and every day in swim lessons. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How about this oil trade?
Oh, baby. Kevin, yesterday, when we were on the air, we were looking at the spreads, and it was like they hit like...
Yeah, just in terms of the premium, right? So we were on from 10 to 11 Eastern Time, Kevin, and the action started at like literally 11:05 a.m.
Right.
So
right as we came on the air for swim lessons.
Right, exactly. So right as we got off. And, of course, any trade you had looked at with some defined risk looking for volatility was a decent trade, to say the least, man. It dropped, literally $2 in the span of about 10 minutes there as the news started to break. And then before you know it, it was back up there at $70 by the time 2 o'clock rolled around.
Yep.
Yeah, we were teaching people with the position we had on in the paper money position we had on in crude oil. We were showing them how to trade the curvature of these markets. Like, we had sold futures on the upside. Yeah. We bought them back when it broke. So, yeah, we were kind of doing that live on television.
How cool is that?
Nothing like that type of action to go over hypothetical situations, for sure.
Right. Yeah. Exactly. So, I mean, the trading crude oil has been pretty amazing. And it was all based on something you have to deal with all the time when you trade futures is rumors.
Yes.
Right? The rumor came out right around 10 o'clock that he was going to stay in the Iran.
Yes.
And so, therefore, I mean, it broke, below $68.
Right. It was remarkable, man. And it was at $70 right before, exactly. Yeah.
Right, exactly. So, I mean, that is the kind of movement that you can get. And that's why, reinforced it on a real-time basis, Tom and Tommy, why you got to trade risk-defined in these markets.
There's no doubt. There's no doubt. You know what's so cool? Think about this. Folks, if you were around 20 years ago, like, would it be 20? Like... Time's going, so I guess maybe it's 25 years ago now.
What are you going to say?
Well, the option market wasn't...
I'm sure 20 years ago applies.
It had the option market, but what ended up happening at the beginning, and it's so weird that the SEC thought the option market was more risky than the broad market, which was always so weird, man. Do you know what I mean? They had these disclosures that were, like, amazing. That's like, this is just blowing my mind that an option trader had to go through so much. Now, over the course of the years, I think people really figured out, no matter what they're saying, is that defined risk is 10 times better than buying a stock and you wake up in the morning and you're down $20. You know what I mean?
Yeah. I mean, the SEC saying that options are more risky is like the car dealers saying the gas pedal and the brake are more risky.
Yeah.
Right? I'm sure if used improperly, yes, they can add risk to a position. But if used properly, options greatly decrease the overall risk in a position.
Yeah.
No, it's a great point, because, the one thing you think of that is so risky is writing, like, naked calls, right, or something.
Yeah.
But that's the one thing. But that's, beyond that, really. I mean, there's,
That's right.
Of course you can back yourself into a corner.
No,
exactly, Tommy. And the people that teach that, and there are people out there that talk about that and teach that, that's irresponsible.
Yeah,
right. That's why we don't do it.
That's a high-risk game, right?
No,
for sure, to put it
Now,
lightly.
you can have single options on, but if you're long them, right, then that risk is still defined.
Right.
But make no mistake, short, naked options, we just don't teach it here because I've seen it. I've seen the other side.
Right.
You better be bankrolled in a large way, because those losses are going to come eventually if you do that on the regular. I mean, it's going to be a harsh reality when it happens.
That quote there that Tommy just did, those losses are going to come, folks. One of the biggest ones I've ever seen. And they were making millions of dollars until they all went broke. And that was in 1999 and 2000.
Sure.
The run, because what had happened at that point, the run, like from 95, because remember, Kevin, that was just big. People were pushing that. And because the market had gone up so dramatically, like for 5 years, and guess what? In 3 months, people were out of business.
Sure.
Right.
Out of business.
Yeah.
I mean, because that's all it takes. It's, it's one of those deals that it's good until it isn't, but because they didn't have defined risk, it's over.
Yeah.
Right. Units.
Yeah.
I used to refer to them as units. Whenever something would happen, I would always, when I came in my office every morning, I would check my units. How many units was I long? I was never short units.
Right.
But how many, if markets got busy and, people were buying volatility, I would always know how many units am I long and can I afford to sell?
Right.
Right?
No, yeah.
Always.
That whole delta neutral curve, right?
Exactly right. So
right.
at least from a new unit basis, it was risk defined, right? It would stop. That doesn't mean you can't play a bigger risk game, right? There's a big difference between, let's say, a $1 vertical and a $5 vertical.
Right.
Right?
Right.
There's, based on your risk tolerance, you can add or subtract risk. But that's a big difference between naked options.
Yes.
Right?
Yeah.
You can still increase your overall risk by widening out your strikes between in your vertical, but don't do naked.
Yeah, there's no doubt, man.
Rules to live by. Don't do naked.
Oh,
right here. There you go.
all around.
No, for sure. Exactly. No. Leave yourself exposed in a big way.
Folks, right here, 45 minutes from now, you want to understand defined risk, option market upside down, the futures market upside down. Great program. Strategies, folks, are where it's at. That's the bottom line.
We'll see what happens with oil. We're going to get those EIA numbers at 10:30. They'll be live on the air at 11. I'm sure we'll continue to get some action there, let alone the markets.
Exactly right.
You better love it. And, thank God for oil today, because it's you get Exxon and Chevron. It's the only thing that's holding the Dow up right now.
Okay.
Absolutely.
Kevin, have a great one, a safe one. We look forward to show in 45 minutes.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 58. Nasdaq is up 18. S&Ps are up 10. Gold up 220. Silver up 12 cents. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 44, Nasdaq's up 19, S&Ps are up 9.5. And Wednesday, we got oil numbers, and oil itself, we love these volatility trades, but bottom line, folks, is this is going to be really intriguing here, watching how this thing shakes out after yesterday.
And I don't think anything can live up to yesterday's volatility, man. If it does,
$2.5 move in 10 minutes, 7 minutes.
Just to look at it real quick, right? I mean, so we were on the air from 10 till 11 yesterday. Just to back up, there's our chart from 10 to 11. We're trading just under $70. We get off the air, and then 11:05 news begins to break on the possible Iran deal, and oil trades from 68.50, call it, down to literally 66.50. Excuse me, yeah, 66.50, 68.50. Is that right? I'm all over the place. 67.60. Yeah, so $2 from 69.60 to 67.60. The span of 10-15 minutes, and then before you know it, it's back above those levels. So we're sitting at 71.01. It's 10, call it 10:20 right now. We get the EIA numbers coming out at 10:30 a.m. Eastern time every Wednesday. So I started jumping around. Let's look at potentially setting up a similar volatility trade, right? Exposure in both directions, looking for those inventory numbers coming out at 10:30. So I pulled up the 11 a.m. spreads. These are the spreads that expire at 11 a.m. They go from 9 till 11 Eastern time. So if we wanted to have bullish and bearish spreads, we're buying the bullish, selling the bearish, looking for volatility. $70.75 is going to be an option for a price that we can use for. That would be a kind of our pivot, as in have an exposure upside from there, have an exposure downside from there.
Not bad. We're at $70.99. Okay.
Yeah, so we'd have 25 cents almost of intrinsic value to the upside. That's where it's going to be a little bit costly, though, when you add that. So just the positive spread alone is going to be $36 because you're adding the $25 of intrinsic value plus 12 cents in premium. Yes. And then on the bearish side, you're out of the money, so you're just paying the premium, which is 12, 13. So you're looking at $49, or which would be about 49 pennies away from 70.75.
Right.
Becomes your break even. Let's jump to the 12s. So the 12s, what's interesting is they're going to line up a little bit. No, excuse me, same exact, right? 70.75. Okay. So here's our exact same spread, except an extra hour. So on the 11 a.m.s, the bullish one was costing us call it 71.08, right? It was costing us about $33. And you can see the difference between the bid offer here with them side by side. And all that's happening is this noon one is giving you an extra hour.
Yes.
So that's what you're paying for, right? So again, the 11 a.m.s were going to cost us, what was it, like $49.
Yeah.
So we'll close those out to avoid confusion. Here's our bullish spread for noon. We're going to pull up the same bearish spread. Again, same exact $1.50 exposure you have. And so for noon, we're going to be looking at 61. Okay, so you're adding about $5 or 5 to 6 pennies on each leg, it looks like,
on
right?
each leg. Yeah, right.
And guess what? The market's probably pricing this a little bit more premium than usual.
Yeah.
Because when you're getting this type of volatility, they're not going to give you a defined risk trade by putting nothing up, right? As in the market's reacting to the volatility in oil, and the premiums might be a little bit higher than they have been recently. So that's your noon trade. Now, what's also happening, though, is that we have quite a head start, and this is moving. And it's moved down about 8 pennies since we started looking at it. But you have quite a head start to the positive side, as in, if you want to break even, even on the noon trade where we're looking for 60 to 65 cents of action, it's a lot easier to break even to the positive side when you have almost a 25-cent head start to the positive side. So let's just jump in and see what kind of other options being our choices. So here's where things get interesting. So you go to the dailies. Now this is where you get 71 for your point. Okay. Now we were at 71 when we started doing this. We're now about 8 pennies under.
That's right. So the 11 and the noon is 70.75. Now we're going to deal with the 71.
Exactly. So the difference being that instead of having about 20 to 25 cents of intrinsic value to the positive side, we're now going to have about 8 pennies to the bearish side in these trades. But what you're going to see is that we only have to pay for that intrinsic value for 8 pennies as opposed to paying the 20. So here's our bullish spread. Now we have $3 as opposed to $1.50, which is a little bit different as well. Like we saw yesterday, $3 is not out of the realm. So here's our bullish spread. This one's going to be the one that's out of the money, so only premium. And we're looking for about $32 is what we're paying there. And then again, we're going to pull up the bearish spread. So same pivot point, $71. Going to be bearish. And this is the one that's going to have about 10 pennies of intrinsic value. So that's costing us about $74. Okay? $74. Again, the difference there, though, is that we have until 2:30 as opposed to until 11 or 12. And you have $3 if oil really gets rocking. And the reason why that this isn't much more expensive than the noon is because of that intrinsic value. This is closer, as in we're only 8 pennies away from the $71 point, which is where our volatility goes from, as in our max loss is going to be at $71 in this position, right? Because then they'd both kind of expire at, the floor of your bullish spread, the ceiling of your bearish spread. You'd have no value at $71. And when we're really close to it, the only intrinsic value right now is in this bearish spread of 8 pennies, as opposed to having to pay 20 to 25 cents of intrinsic value in the 11s or 12s.
You know what's pretty cool about this, too, is that, the volatility trades, folks, you're just looking for volatility. And if you do have a bias one way or the other, you have a couple of different choices here, which are pretty cool.
It's a great point, definitely. I was talking to some traders yesterday about just the trades we were talking about, and they kind of said the same thing about the trades we were looking at yesterday, because they were great volatility trades, but you could have been directionally biased in one way or the other, and man, what a trade that ended up to be. If you were bearish, or if you'd seen that spike down to $68 and you decided to take a bullish position and you got the rebound back up to 70 by 2 o'clock.
Crazy.
So either way, right? You're 5 pennies away from $71, and we focus on both of these contracts. But yeah, if you're bullish, boom, there's your $33 cost, okay? If you're bearish, there's your $39. The only difference being the 6 pennies of intrinsic value you're paying for the negative spread, because guess what? You have that value if it expires right where it's at right now.
And the numbers that come out last night, there was a big drawdown in distilled. Distilled
for
was like
API?
6.7 million barrels.
Interesting.
And what that is, distilled, folks, was heating oil as well as jet fuel. So it's like you don't know which one is going to. I mean, I guess we dig into what we could, but bottom line is that is a big number. That's
pretty remarkable. $71 oil. We were just at $68 less than 24 hours ago. You got some geopolitical risk in there for sure. But it'll be interesting to see how the market reacts to this with such an underlying geopolitical situation going on. As in, we're talking to our man Kevin Hinks yesterday, and we were just saying, is the IAEA going to be as big as it normally is in a week, where it might not be as big of a deciding factor in the price of oil?
They might have already just bought it last night and said, okay, we're going higher.
And as long as there's not a mammoth surprise there, right? I mean, it might not be the market might not react to it in too dramatic of a fashion, considering that there are other issues that might be more of a driving force. Now, the other side of these, we always talk about, you know, the ability to be looking for volatility. You could be the person selling volatility here in the same essence, you know, in terms of we're buying the bullish spread. You can be the person selling the bullish spread, right? So you're taking in $31 on the positive side. You could be the person buying the bearish spread. You're taking in $37. So you would be taking in $68. And basically, that's your max profit in that position, right? And then your goal is that it expires as close to 71 as possible. So there's a million different ways if you think the volatility's out of it yesterday, right?
That's a huge point, man. We got to start looking at it.
Especially because you have a tight bid-offer spread, right? So it's not like you can trade out of these if it starts moving against you.
So dramatically.
Definitely.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the...
We'll be right back with those oil numbers in 3 minutes, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 31, Nasdaq up 12, S&P's up 8.5, and what do we got with oil here?
We got the headline number coming in. So you have crude oil inventories falling 2.2 million barrels. Gas inventories falling 2.17 million barrels. Let's jump over back to the Nadex platform, check out how the market is reacting to that number. Quite a little boost
baby.
here. So we were trading just under $71, right? We're trading about $70.92 prior to that news. We're getting a little bit of a bid as we speak, trading $71.22. So again, remember, a few of these different trades. You had the 11 a.m.s and the 12s.
Yep.
Those were lining up with $70.75, kind of being our pivot point where we had profitability anywhere away from that point. And we had a head start to the upside.
Yes.
So this type of action, if you were to trade the 11s or the 12s looking for volatility,
they had both in the
that
money.
would have been a move in the right direction.
Right.
And then, you know, the daily, the 230 had 71, which we're pretty close to. When we started analyzing the trade, we were kind of right at $71. We were about 8 pennies below that by the time 10:30 rolled around. So 22 pennies, but like we always talk about, the first move is not always the move that carries through in this. So we'll check back in, but a little bit of a market upside reaction, and we'll check back in on some of those numbers as well. There we go. I wanted to get the full breakdown. So the estimate was for an increase of 1 million barrels.
Wow.
We had a decline of
Look at
2.2.
Yeah.
That's why you're getting a thrust upward immediately, right?
Yeah.
But they dig in. I mean, there's so many numbers in this EIA number that comes out every Wednesday at 10:30 Eastern time. So Cushing crude plus 1.3 million barrels. PAD 3 crude, a decline of 2.5 million barrels. Gasoline was estimated about 0, decline of 2.2 million barrels. Distillate, estimate was decline of 1.5, ended up being a decline of 3.7 million.
We're drawing down oil.
Yeah.
That's the bottom line.
Fuel demand rising almost 1% in the past four weeks.
And they say that, May 30th is the beginning of driving season, right, for the summer.
Yes.
We go more places. We basically take more trips.
Definitely, right. So check back in one more. It would always move so quickly. I want to check back every 15 seconds right after that news comes out. So $71, getting a bid of about 20 pennies. We'll check back in.
Pretty wild, man.
Yeah.
You gotta love it.
Definitely.
Let's go take a look and see what some of the higher volatility stocks and see what we got out here. Well, TripAdvisor. We'll get into that. That's up big. That's up $8 right now. Now that stock has got killed, but bottom line, it's up 20% today. We have Bank of America up 46 cents. Walmart's down 3.51. Let's go look at Walmart. So Walmart was buying what? The biggest internet company in
India, right?
In India. Look at Walmart's and ABC down. Oh baby, watch out! This is wild, man. This is a big one too.
I think it was it $16 billion, I believe they paid for a pretty dramatic stake.
So
yeah, Flipkart.
The world's wealthiest family has just bestowed billionaire status on two of India's most feted tech entrepreneurs. Walmart, controlled by the Walton family, led a group that bought 77% stake in Flipkart online services. The deal valued the Indian firm at $21 billion. Not bad.
So these are the two co-founders, Binny and Sachin Bansal.
Yeah.
Hopefully I'm pronouncing that somewhere. So they're not related. They were Amazon employees who quit to start their own e-commerce firm in India.
Wow.
Before the deal, they each owned about 5%. They should have learned from working at Amazon that you keep at least 20% of the company, like Jeff Bezos. No, that's a big number, of course, for I'm sure what they're doing. Become billionaires as they sell a portion. So one of them sold their entire stake to Walmart, while the other one will sell part of his to the American retailer.
Okay.
So one wants to take his billions and do whatever he wants. The other one wants some upward exposure to wherever that ends up. But they each get about $1 billion. And they're going to have to pay 20%. Well, they should.
And it has there that, Bezos was going after it also. But bottom line is that the board went for Walmart.
Interesting.
Yeah.
That's quite a high-stakes negotiation, I'm sure.
Yeah. So let's go look at Walmart. So Walmart is...
So this is just the last part. So it's interesting, though, in that the Flipkart was valued at $16 billion in 2015. And let's see, they lost that status as it
the valuation.
I mean, you don't see a juggernaut like that go up and then go back down, as in it was only valued at $12 billion last year.
Right. And the way that works, folks, is that so when you're private, what ends up happening is that you're going out for valuation. They sold the valuation at 16. Then they evidently needed more money. Then the next valuation was basically a push down. They sold it at 12.
Yeah, as in if you're selling 1% of the company, well, that 1% is valuing the full company at $16 billion. Well, the next year, I mean, no company likes to raise money. So that means there must have been some serious problems where it's like decreasing the value. You're kind of in a, you're not in a strong negotiation, but. I mean, it's just remarkable, though, in terms of that's such an expanding economy. You know, if you're the formidable online retailer in an economy that's just gangbusters expanding like India, why are you shrinking in value? It's just interesting how that happened, but they're obviously doing well.
So Walmart, you get an ABC down. So your A point is 97, your B is 84. So you go about $13, gets you 76. We're at 82. Let's see what's at 76 here. So you're inside the lower range. 65. Oh, look at that, so wild, man. 76 is where we broke out from in October. It's pretty wild. Markets just love to go back to where they break out from, man. Anyway, that's where, you know, that was strong there. But what Walmart's problem is that it's in the lower range again now, you know? So let me pull this back even more. Yeah. You know, if we'll see, 76 is not the end of the world, though. 60 would be the end of the world for Walmart.
Yeah, that's a different level for sure.
Yeah.
We're at 82 right now.
Exactly, exactly. And, you know, we'll see how the rest of this shakes out. The Dow looks like it's having a hard time holding price. And when I looked at this earlier when we were talking to Kevin, it was Chevron and Exxon that was basically giving it some juice. So Walmart is the big dent in it. Not huge, minus 24 points.
Walmart's only an $80 stock, right? I mean, if this was capital weighted, that would be quite a mammoth number with a company like Walmart, but no.
Chevron is the leader. That's putting 24 positive points. Cat's putting 16. Goldman's putting 14. Exxon's putting 13. Inside the NDX 100, you get Dish Networks up 4.5%. We'll have to take a look at that. Electronics Arts up 3.5%.
Their earnings, so
Micron up 3.2, Mylan Pharmaceutical up 3. Taken away from it, look at Liberty's getting smoked. Liberty down 8.3, Monster.com down 6.8, and Marriott's down 2.4. Let's go over to Monster for a second. I was looking at this last night, and you know the drink business is a fortune, but they seem to implode pretty quickly too.
Okay.
Yeah, this is another ABC. This is an ABC down too. Let me pull this back.
Whenever you're done with the charts, can you just go into their financials? I'm just curious. I want to see their revenue, because how do you go from the rise and the fall, right?
I know. So $70 February of this year.
Yeah.
Wow, that was quick.
That was.
Okay, so let's see what we got here.
I think it was like a $27 billion company.
Yeah, so $2.5 billion in 2014, 3.8 this year.
Everything looks good on this page, right? It really does.
I
mean, in terms, I wanted to see growth on earnings. I wanted to see, growth on, growth on revenue, growth on earnings. But I guess expectations were probably higher. That's all it comes down to.
We'll dig into it as soon as we get back. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Right now we have the Dow up 41. You get the Nasdaq up 16. S&Ps are up 9. We're going to have our man, Mr. Dave White, coming up. We talk about defined options with Kevin Hinks, and we got the master of White Lightning coming up with a workshop, folks, a week from today.
That's right.
Yeah.
You nailed it, man.
Right.
So White Lightning. Tell me, White Lightning, what's that, the Wednesday of... options expiration?
You can almost call it the last week.
Okay.
Because what it is that, you know, the premiums get very low.
Sure.
And when you're going in, you're really going in very quickly to get out. I mean, you know,
yeah.
Because if you make it, you're going to make it quick. If
I mean,
you know,
somewhat similar to the strategy that we employ with Nadex a little bit, where you know you're paying small premiums. That's what we're not setting up these trades 5 days in advance, even on Nadex, because you'd be paying a lot of premiums, so those moves wouldn't be as substantial. So yeah, a week from today, he'll be in there, option trading their expiration. And he's going to be looking at analyzing swing trades and expiration day scenarios. I know Dave sent out updates for the Tech Insider today, I believe, as well. Now, that's usually his weekly newsletter goes out Fridays, but he has updates throughout the week as warranted. And then, of course, Path of Least Resistance. Every morning that comes out along with updates throughout the day when warranted. Yeah, he's had some great option trades recently. He wanted to do an options class. We were talking to him last month, right? And he said, well, I'd love to do one maybe, you know, the week of expiration.
Right.
So we set it up for May. Expiration is a week.
Because then you have something actionable, too, which is really cool, folks.
And that's when he can really look at it and talk about the setups. He's already talking about it in his newsletters, and that's kind of what he was putting out some updates about. And so, yeah, I encourage people to head on over, sign up right now. Dave's already talking about kind of the methodology, the strategies, what he's talking about leading up to options expiration. And he'll be in there for an hour a week from today, May 16th, 5 till 6. Of course, that'll be archived for subscribers of Path of Least Resistance and the Tech Insider. And I know Dave's going to jump on your program as well at 4:15 for this program at 2 o'clock. Man.
Perfect.
What a time for options analysis, right?
There's no doubt.
Seriously.
Man. There's no doubt.
Definitely.
You know, the movement's out here. It's out here every day, too, which is pretty wild, man. Let's go look at that gold contract. So gold.
Talking about movements, man.
Yeah, it's you know.
Looks like a calm day, being up $3 at 13.16. But yeah, we were down there at 13.04 early in the session.
So you get a $12 move thus far.
Yeah.
Now the exciting thing when I'm looking at this is that we still haven't broken the lowest swing, and you know. That's
quite a little tight consolidation, man.
It is. And
when's the last time we were within $10 or $15 for the span of 2 weeks on gold? Right. I mean,
right. And the battle. This is where the battle line is. Right where we are.
Yeah.
You know, today might be the day it does it. You know, we'll see. When I'm talking about
trading higher and breaking out of it,
out of the range, right? Okay. Because the bulls and bears have been fighting dramatically over this $1,315, $1,314 area. You know, the longer you stay at a new area, your higher probability goes, okay, that's the range. So, you know, if you're a bull like I am, it's like, get out of here, man. You know, I want you back up on the other floor.
Yeah, you want it in the 1325 to 1360 range.
I do. Convincingly, too. Do you know what I mean? And, you know, out here today, we'll see. I mean, this thing can, you know, if we got to close up at that, the 1320, that'd be a nice scene, man.
And we're at the highs of the session right now. I mean, we were just ticking at 1317.30, which is the high.
So let's take a look at this intraday. Okay, so
quite a move.
Yeah, it's a good move, and we're gonna need. Oh, see, this is good. That 1318 has volume up there. Let me pull this a little bit closer. So a little bit closer. Excuse me. We're gonna need a little more juice. Come on, we need a nice big bar here. Let's go look at the dollar and see what's happened to the dollar. It looks to me like the dollar's topped out. Now, this is going to be really intriguing if it is. It got right next to this swing point. So the swing point was 93,480 from December 12th. We got to 93,260.
Okay.
And, you know, we'll see if, in fact, you know, we won't know this today. I mean, but if it lays out and it closes where it is, it's like, okay, are you going to get any type of pullback? Because if you happen to watch Tiger TV, folks, you're going to see we have not got any pullback whatsoever since the 17th of April.
Pretty remarkable.
It really, that's quite a run. That's no doubt, that's quite a run. It really is. The bonds, bottom line, we're going to see where these bonds shake out.
1 p.m. the auction.
Yeah, and that the 119.11 right now. This 119.14 is a big number. Say, you know, the bonds.
That's the 10-year we're looking at.
Yeah, the bonds are doing the same thing as gold was doing. You know, teetering. And this lower level, you know, you can see that it got under the lower level again this morning. You know, it's been over above it twice. That's it. And the bonds, I would say the bonds are some of the most deviant ones out there, because what you do have now, you know, if you're a fundamentalist, you're going to say, hey, you know, the interest rates have to go up. Well, nothing has to happen, folks.
That is true. That is the only thing that's true is that we can't be sure what's going to happen in terms of having to happen.
Right.
So let's check back in on the oil price. See what's happening.
Look at that.
So quite a little decline, right? We got an initial spike higher. It's always interesting following these on Wednesday in terms of the moves we get in both directions. So we were trading just under $71 before the news came out. We had the decline of about 2.2 million barrels. Oil spikes to a high of 71.27, and we're now about 50 cents below that level, trading at 70.82. So we'll see how it shakes out.
Well, and what's intriguing there is the aspect which you had brought up at the end of that conversation about you could flip that and take the premium in on the other side.
Selling the volatility, right? I mean, we normally go over the examples of maybe buying the volatility. It looked like there might have been a little bit more premium than normally.
Right.
Rightfully so, probably.
That's right.
And so, you know, you could go directionally one way or the other we talked about, or you could be the one selling the volatility. We're usually looking at buying it, but, you know, when you're selling the volatility, we talked about you would have been taking in somewhere around, was it like $55, $60 for both sides of that? So basically that becomes your max profit.
Right.
And then your max profit being, if it expires, right, at $71.
Yeah.
So you would have taken in about $60, which represents 60 cents. And then basically every penny away from $71 is taken away from that, right? That's kind of a loss off of the value you gained when you initiated that position.
Exactly. And as Tommy just said, it seemed that there was definitely a little more premium inside that today, which is important, and that's what it's all about when you are trading defined risk in the option market. You know, that you can take that choice. So, okay, do you think the premium is worth the risk at this particular point? You know,
what's the market assigning the premium, right? And then you get to decide. Do I think that's undervalued? Do I think that's overvalued? If it's undervalued, maybe you're going to be the one buying the premium, paying for the premium because they're not putting enough premium in there. So I'm going to be paying. Well, they're putting a lot of premium in today. Well, you know what? I'm not maybe looking for a huge. Maybe oil ran out of steam with all that action yesterday.
And it did. Yeah. It's tired, man. It was working out all night long. It's been working out for 24 hours.
24 hours, man, right?
It needs a nap.
Those oil traders, man, they didn't sleep yesterday. I don't think they slept last night. I wouldn't have if I was an oil trader.
You know what's wild is that Andy Heck had bring up, and there's no doubt on Tuesday when I was interviewing him, last night I guess, or yesterday, between the biggest oil trader packed it in when oil was at the lows, and the biggest cocoa trader,
Andy
Hall.
Hall, yeah.
And then the biggest cocoa trader did the same thing. It's like, wow, man, you know, you see that, and it's and it's pretty intense. And in both cases, you know, I mean, that was...
Oh, you're talking about hundreds of millions, if not billions.
Yeah,
right.
totally.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 22, Nasdaq's up 11, S&P's up 6.5. Market's having a hard time holding price out here, folks. Tommy and I are coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow down 4, Nasdaq flat, S&P's up 3. Market's having a tough time holding price here.
Dow negative. What's going on, man? Dow was 100 points positive as I was doing that 9 o'clock update, so quite a 2 hours, negative territory. What's the VIX doing? Can we just pull up the VIX? I'm curious where their volatility index is with the market pulling back a bit.
It's laying there at 14.
It's hanging, man. We're at the lows.
No one's nervous. Not yet.
What's to be nervous about, man?
Yeah, no, totally.
Market's going higher.
Bottom line is that, you know, it's amazing. Now we're into, you know, May 8th. May 8th. And when you look back, you know, we're talking about, I think, January 24th is the high.
Today's the 9th, too.
Oh, today's the 9th. Yeah. Okay, so I think that high is laid out here. What is that? What day is that? That's... Yeah, 26th, January 26th.
Okay.
So let's go back to oil, right, and see what we got happening
out
here.
one more time. So we're approaching the end of the 11 o'clock hour. So $70.80. And, you know, what's interesting here as well, if we looked at the 11 a.m.s, that would have been an unfortunate if you were the one buying, looking for volatility, because the 11 a.m.s, if you remember, we're using $70.75 as the pivot point.
And 49 cents it cost us.
Yeah, so, and just the point, though, we're trading literally at 70.75, which is your max loss. Now, you could have been the one selling the the premium there, the volatility as well. But man, oil just continuing to decline. Pretty remarkable. We got a spike up to 71.27. We're already almost 60 pennies below that level. So.
You know, it'd be wild is that. Here, let me bring that oil contract up quick, because I didn't see, I want to see if that's a high volume low. If that's a high volume low from yesterday, we might get a retest today. Wouldn't that be wild?
Okay.
Well, you're going to have to stay there, and our man Kevin Hinks and Basil Chapman will go over it.
I'm sure they'll have a lot to talk about, for sure.
Dow right now is down 9, Nasdaq's off 2, S&P is up 3.5. We get swim lessons coming up. Our man Mr. Basil Chapman, Steve Rhodes, Dave White, myself. Thanks,
Gotta love it, man.
Wow, go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.